Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, we're going to dive down the rabbit hole and cover some groundbreaking DeFi developments that involve Ripple, XRP, some other altcoins, but primarily fixating our attention on financial institutions that are evolving in this space to offer DeFi solutions to both retail and institutional investors. Today is going to be one of those video breakdowns that you're not going to want to miss. If you enjoy these deep dives, these thorough research video breakdowns showing you guys how ever evolving this space in the DeFi and crypto ecosystem truly is, then do us a favor, smash that thumbs up button and subscribe. Always keeping you guys in the loop with these updated and ongoing fundamentals to show you guys what you should be paying attention to. So we're going to dive in here today, and I'm going to start by reading this off to you all, because this is very powerful. It is a message that most people will ignore, but people should not be ignoring at this point in the game. So I said here, many retail traders remain skeptical about DeFi, often viewing it as unregulated or unsecure. That concern isn't unfounded. There are still areas of the DeFi ecosystem that operate without strong safeguards or oversight that I can agree with. However, those willing to look beyond the headlines will discover that regulated yield products do exist. In fact, they are already being used and offered by highly regulated and secure financial institutions, and many of these solutions are available to both retail and institutional participants. We are moving toward a full-scale utility-driven DeFi environment. This shift is not a matter of speculation, it's a visible trend. Holding on to an outdated perception of DeFi could mean missing the opportunity to adapt alongside the market trends. Historically, retail traders had the advantage of getting in before institutions. That window, however, is now narrowing as more institutional players previously on the sidelines begin integrating DeFi strategies, which I'm going to share with you guys in today's video breakdown. So the takeaway here is clear. Assess your risk tolerance, do thorough research, and recognize that institutional money is signaling where the future is headed. Those who learn how to implement DeFi yield generation strategies today will be better positioned to grow and protect their digital wealth in years to come. And then I tagged the little Wealth 28 logo, because this is exactly what we've been touting to you guys for over a year now, almost 2 years now in the Wealth 28 Club. And now I'm going to show you guys those details and ongoing fundamentals. So first, I want to take you guys over here to this recent panel discussion that took place. And I want you guys to listen directly to an individual that comes from a financial institution that is heavily regulated, titled Amina Bank. So this is a gentleman, his name is Miles Harrison. He's the chief product officer at Amina Bank. And listen here to what he has to say.
Yeah, from our perspective, I mean, Chris touched on being a regulated entity. We're a regulated bank, which is, kind of the highest level of regulation you can get in most countries. So we are under intense scrutiny, every move from our regulators, and rightly so. We're held to account on that basis. We are starting to see the institutionalization of DeFi. So CeFi is taking the best bits from DeFi and putting that into traditional financial systems. That might not be, if you're a DeFi purist, that might not be where your heart lies, but that is what's happening.
What does that mean? Do you mind expanding on that?
So banks, for example, for us, we're able to take tokenized collateral, right, which most banks cannot do today, right? They might have it in a sandbox. We have it live in production and can issue a loan tomorrow based on tokenized collateral. We take most cryptos, not just BTC and ETH. We take altcoins. Again, most lenders, regulated banks cannot do that today. We also utilize smart contracts to make the processes more efficient, to remove intermediaries, the very essence of blockchain as a technology in use case for financial services. And we also start to look at on-chain settlement. On-chain settlement becomes a bit more difficult because of the geographical spread and where our clients are based and whether something will stand up in a court of law. But we're starting to experiment with on-chain settlement.
So I wanted you guys to hear that directly from an individual representative from a regulated entity mentioned that they can offer crypto as collateral to their clients. And he mentioned Bitcoin and Ethereum and also other altcoins, right? So Take into consideration people that still think that we're operating in an unregulated environment where DeFi is unregulated. Yet here you have an institutional participant letting you guys know that this is possible right now in the moment in a regulated environment. Now, this is a gentleman. He is the key founder of KeyRock. For those of you guys who do not know who KeyRock is, KeyRock in a nutshell is a market maker in the digital asset ecosystem. Take a second and listen to what he says, how we're entering into this era where things are going to start to ramp up soon. They're going to take the DeFi ecosystem and expand it substantially.
We had fully centralized players with all the control and no oversight whatsoever. And that's basically what led to, all the issues that we've had in the previous cycles. Now, this has somewhat matured, and it's not, we're not there yet, but we're on the right path where we're starting to have more and more actual oversight of the centralized players. But even more interestingly, we're actually starting to build something better with what is now available on DeFi, where you have this kind of baked-in transparency. Of course, it's not perfect yet, and we've had many debates over the day around what is still missing, in terms of regulatory compliance, for example, for DeFi to really be able to, become as big as I personally believe it should be. But I think still we are seeing this maturing on the market, and that has made a tremendous change. And I think we're still not at reach the high there was in terms of lending compared to previous cycle, but we are getting there. And more interestingly, we're seeing a really innovative solution now that, are going to dramatically increase the size of the market.
We're seeing innovative solutions unfold that are going to dramatically increase the size of the DeFi market. This is huge confirmation from a market maker that exists in this space right now. Now, his statement coexists with exactly what I said to you guys in this post, right? Many retail traders still remain skeptical about DeFi, often viewing it as unregulated or unsecure. However, that concern is not unfounded. There are still areas in the DeFi ecosystem that operate without strong safeguards or oversight, but those willing to look beyond the headlines will discover that regulated yield products do exist. So just like that gentleman said, the market is maturing. We're not quite there yet, but we are on the precipice of experiencing huge developments that are going to drive this market significantly higher, which then coexists with what I said here, how retail traders had the advantage of getting in before the institutions, but that window is now narrowing. So this is why it's so important that you pay attention to posts like this, back with institutional insights from people whose opinions actually matter in this space. Now, just to take a look at this video, it was uploaded only on July 4th and has 128 views. Shout out to the CYPRX researchers for sharing this panel discussion in our private Discord. I cannot stress enough that this is the type of information you want to be tapped into. So let's continue to move on. Ongoing with the Ripple developments in the DeFi ecosystem. This is directly from Marcus Infinger, the SVP of Ripple X. And he said here, in a recent conversation, by the way, this is only from 6 days ago as of time of recording. It is August 13th. Depending on when you're watching this video breakdown, it could be a couple of days later, but this is still within the last month. In a recent conversation with Leonard Schellberg at BN Crypto, they discussed how Ripple is unlocking the next phase of blockchain utility for institutions on the XRP ledger. I want to pause right there because this coexists with the post that I just recently made that for some odd reason, people think I'm crazy for saying things like this, but in reality, they're just not doing enough research. I said here, DeFi is about to be the catalyst that finally unlocks a higher XRP price. Not from cross-border payments, but from large organizations and whales putting their XRP to work. The moon prices that most crap influencers have been promising you for years is not coming from hype and cross-border remittances. It's going to come from a massive wave of DeFi activity. Dormant XRP waking up. Yet most people still don't have a profitable strategy or even know how to lend and borrow, how to stake and liquid stake, how to farm and vault, how to swap and connect the wallet to a DApp, how to tap into fractional ownership and yield generation with real-world assets. This is the new era of utility for XRP holders, and the ones who understand it early will be the ones holding the bag of profits beyond 2030, while the rest will be sitting in fiat or cash after they sell, waiting for some pullback that may never come. The Wealth 28 Club exists to make sure that you are one of those individuals that understands these things listed above. We give you the education, we battle test strategies, and the community to master DeFi and position yourself before the floodgates open. Stop guessing and start compounding. So back to this post from Marcus Infinger, the SVP of Ripple X. What is he going to say? The XRP ledger is acting as a foundational layer for financial applications such as tokenization of real-world assets. Two recent Ripple partnerships highlight this. Our work with CTRL et al. In the Dubai Land Department has seen the DLD issue title deeds directly on the XRP ledger, which we've covered in previous video breakdowns. Guggenheim Treasury Services is issuing tokenized commercial paper on the XRP ledger in partnership with Ripple and Zeconomy. Now, I want to really highlight this partnership because of what Zeconomy is and what it offers. We'll get to that in just 1 second. As these use cases are established on the XRPL, new features such as the recently launched XRPL EVM sidechain, which unlocks DeFi capabilities on the XRPL, are further enabling programmable compliant DeFi, look at that right there, and paving the way for a multi-chain future. And this interaction between decentralized and regulated systems will become the normal. The importance of public blockchains like the XRPL, which offer transparency, immutability, and security, is growing. And so we're going to come over here to this recent announcement because this falls in line with exactly what I said here, that the next era and wave of utility on the XRPL is going to come from DeFi unlocks, right? And so if we go over to that announcement, here it is. This is from this year, June 10th, 2025. Let's thoroughly read through this because most likely the influencers on the internet telling you guys these high-end XRP prices missed this one completely. But this just goes to show that DeFi is that next unlock for higher XRP prices. Digital commercial paper DCP, a fixed income asset secured by US Treasuries and rated Prime 1 by Moody's, is now live on the XRP ledger, a public blockchain built for the efficient tokenization of real-world assets. Administered by Guggenheim and Treasury Services, one of the largest independent commercial paper platform managers in the world and wholly owned by a subsidiary of Guggenheim and Capital, DCP is a tokenized, issued, and managed through the Zeconomy platform. We'll get back to this economy platform in just 1 second. On the XRPL, DCP will leverage the network's fast settlement, low transaction costs, and round-the-clock accessibility. Then down here, it goes on to mention, DCP offers an ideal solution for digital traders seeking a yield-bearing, I repeat, a yield-bearing on-chain asset to use as collateral in their strategies. And you heard the gentleman from the financial institution, Amina Bank, mention that they offer collateral to their clients in multiple different crypto assets, including Bitcoin, Ethereum, and altcoins. Zeconomy's platform delivers institutional-grade models and a powerful toolkit that brings corporations and traditional finance participants together to solve real-world problems on-chain, said Jacinto Casano, the CEO at Zeconomy, in a statement. The expansion of DCP to the XRPL is a key marker for the future of tokenized finance, combining institutional strength with enterprise focus of Ripple, right? And so if we come over here to Zeconomy, for those of you all who don't know, look at this right on their page. It says, built for every financial ecosystem. And what do they offer right down here? From traditional institutions to cutting-edge DeFi protocols, our platform adapts to our unique requirements. They offer institutional finance, enterprise-grade solutions for banks, asset managers, and financial institutions seeking compliant DeFi integration, regulatory compliance, risk management, custodial integration, and audit trails all built in. They offer enterprise solutions, scalable blockchain infrastructure for enterprises looking to tokenize assets and streamline financial operations. They offer DeFi protocols, advanced financial engineering tools for DeFi protocols to enhance yield generation and risk-adjusted returns. They offer yield optimization, multi-chain routing, liquidity management, and protocol integration. This is huge. And guess what? The digital commercial paper, or DCP, which is a fixed income asset secured by the US Treasuries and is managed through the Zeconomy platform, just launched live on the XRP ledger, right? So I'm just trying to show you guys proof in the pudding. Now, this was also a huge announcement surrounding the maturation of the DeFi ecosystem onto the XRP ledger and what's coming for both retail and institutional investors. This is just yesterday. Vivo Power selects Crypto.com as a partner to support their digital asset treasury strategy. August 12, 2025, Crypto.com and Vivo Power International announced today that Vivo Power has selected Crypto.com to be a strategic partner to provide custodial support for the expansion of its digital asset treasury strategy holding. Announced today that Vivo Power has selected Crypto.com to be a strategic partner to provide custodial support for the expansion of its digital asset treasury holding strategy, as well as with regards to Corret's digital asset mining strategy. Now, what is the digital asset treasury holding strategy that Vivo Power launched? For those of you all who don't know, we covered this as well in a previous video breakdown. So if we go back to June 11th, 2025, you can see Vivo Power and Flare launched a definitive strategic partnership to deploy $100 million into XRP for institutional yield, right? And so if we come right down here, it says Vivo Power will generate yield via protocols on Flare such as Firelight and reinvest that income directly back into its core XRP holdings, creating a perpetually compounding and capital efficient treasury. Does this sound like they're buying XRP to then sell it for fiat currency at some high-end price? No, they're putting $100 million into XRP to generate institutional yield. I'm telling you guys right now, this is a wake-up call where you need to start to pay attention to what the institutions and the large organizations that are putting hundreds of $millions in this space are actually doing with their capital. So if we come back to this to continue reading, it says, Crypto.com Custody, Crypto.com's institutional grade custody offering will provide the custodial services. Crypto.com Custody offers custodial services to eligible institutions and high net worth clients through a comprehensive end-to-end solution with safety and security at its core. With this partnership, Vivo Power shares will be available for trading through Crypto.com's broker-dealer, making it easier than ever for both crypto native and retail investors to trade. Through Crypto.com's platform, the shareholders will also benefit from superior liquidity for XRP and other digital assets, as well as access to upcoming XRP restaking via Flare, which Vivo Power has already partnered with. So again, huge announcements on the developments that are ongoing in the DeFi ecosystem on the XRPL. I cannot stress enough that if you guys do not know how to do this list of things efficiently and effectively right now in your portfolio, now is the time to learn. You can head over to CYPRXtrading.com. You can tap into the Wealth 28 Club so that you don't have to risk your XRP or your cryptocurrencies to learn. You can watch us risk our crypto. Where in the Wealth 28 Club, you have over 200 private video breakdowns going over lending and borrowing, staking and liquid staking, farming and vaulting. And then heading into the future, we're also going to integrate strategies where we tap into fractional ownership and yield generation with RWAs. And you guys can do all of that and learn all of that without risking your crypto, which is what I personally recommend, right? Don't go out there and risk your crypto. Learn from other people who are willing to take the risk before you go out and take the risk yourself, so that way you know what you're doing. So that was just a huge ongoing development that I wanted to share with you guys. Back to this post that we started off with here today, because again, a lot of retail traders remain skeptical and they think that DeFi still operates in an unregulated environment. Well, down here on this post, I pinned this announcement from Bounce Club. So we're going to come over here and we're going to thoroughly read through this so that way your skepticism can end and you can see that a platform built out by a regulated financial institution is available for the all, right? Both retail and institutional investors right now in the moment, where you can earn double-digit yields. I repeat, double-digit yields that are offered by a regulated entity. So again, go back in your thought process and on the influencer space on Twitter and on YouTube and watch how many people are still skeptical about double-digit yields. Meanwhile, a regulated entity is offering double-digit yield opportunities for both retail and institutions. So check this out. This post from Franklin Templeton Digital Assets reads, Franklin Templeton is pleased to share that the Benji token, representing shares of the Franklin on-chain U.S. government money market fund, is now being used as a base collateral in structured yield strategies developed by BounceBit. This marks one of the first implementations of a regulated fund operating within an on-chain financial infrastructure. BB Prime, BounceBit's platform, will serve as a bridge connecting institutional fixed income with automated crypto execution. The platform supports regulated custody, smart contract-based capital allocation, and automated execution of strategies. BounceBit's pioneering CDeFi, or centralized decentralized finance infrastructure, offering institutional-grade yield products, restaking use cases, real-world assets integration, making high-yield opportunities accessible for all. So I want to really thoroughly break down this platform and dive a little bit deeper. So this is an AMA recap that they had via a Twitter space that you guys can go and tap into. I highly suggest that you go and you listen thoroughly through this. It's about an hour long and you're going to find out so much good, valuable information. But it says here in the recap, BounceBit has plugged Franklin Templeton's tokenized US T-bill fund, Benji, into its BBB Prime, creating a dual yield structure, earning steady T-bill interest while running delta-neutral crypto arbitrage. This is a huge part right here. It says Franklin Templeton shared in this space how their on-chain fund pays intraday yield 24/7 with per second accruals, and how collateral mirroring with OKX and Standard Charter lets assets keep earning even while they're locked. BounceBit's approach is a first moving fast in all regions trading hours. In live tests, the strategy produced 22% APY by stacking regulated asset yield on top of crypto returns. I repeat, 22% APY by stacking regulated asset yield on top of crypto returns. You cannot make this up. So for anybody out there that is on the internet that is still telling you guys that double-digit yields should be seen as something that you should be skeptical about, this is a regulated product right here that's offering this type of yield. This is huge. So with APAC at the center of global trading flows, the path is clear. Starting with institutions, then opening up to retail, bringing the first truly integrated TradFi crypto yield model to the market. So let's dive into this platform. If we come over here, this is their platform, BounceBit, and this looks identical to some of the protocols that we run strategies on right now in the Wealth 28 Club, which is just so phenomenal because coming from the unregulated DeFi ecosystem to then coming over here and participating in regulated products, the user interface is literally identical. So here is the user interface. It's really great. I'm not going to do a whole entire walkthrough on this user interface, but straight up here in the right-hand corner, you can connect your wallet. And they even have a wallet connect feature, which means that it's probably compatible with cold storage wallets like Tangem, right? So you can use this platform directly through your cold storage wallet likely, and you can earn yield. Now, I want to come over here to the docs part of this because it says this is where you really want to thoroughly read through and understand this platform. Check this out. The BounceBit C DeFi system operates as an optional feature suite integrating regulated custody with decentralized yield generation. The architecture leverages Sifu's custody infrastructure to enable delta-neutral holding strategies while maintaining asset security. The system's foundation rests on two primary custody providers, Sifu, formerly known as Binance Custody, and Mainnet Digital. These regulated entities implement a multi-party approval system for asset movements, ensuring comprehensive security through a robust regulatory compliance framework. The reason why I'm reading this to you guys is because, again, we are in an environment where misinformation is at its finest. And you have a suite of uneducated retail investors that are still telling you guys to be extremely cautious and not touch DeFi because it's unregulated. Yet here you guys have a regulated product. Again, I'm not saying to go out and use it, but a regulated product that you could go out and do research on and educate yourself on, which coming over here and reading the documents, by the way, on this platform is absolutely free. It's free to educate yourself on these platforms. So don't ignore your education. I highly suggest you guys come over here to the docs on this platform, read thoroughly through it, and educate yourself on what is possible, the rewards that you can generate, the yield that you can accumulate and compound, as you guys heard, every second of every day, 24/7. This is a huge step up in the DeFi ecosystem that most people are ignoring. So I'll leave it there. It is now up to you guys to come over here and check this platform out. Again, I'm not supporting this platform or telling you guys to go out there and deploy on this platform by any means. But what I am showing you guys is that these platforms are being offered by regulated entities and at scale right now for you to start generating yield and expand your wealth. As we continue, I have yet again another fundamental piece here for you guys showing regulated entities in the digital asset ecosystem are screaming staking, yield generation on layer one blockchains and altcoins that you most likely know about if you've been watching us here on the CYPRX platform. This announcement is coming from the Soy Foundation. Pause real fast before we thoroughly read through this fundamental piece. If you guys are enjoying this research so far, showing you guys that now is not the time to be skeptical about DeFi, and instead, now's the time for you to engage in your education in this space. You do not have to go out there and risk your hard-earned digital assets to learn about these things. Read thoroughly through the fundamentals. Everything that I've done here for you guys today is absolutely free. And all it requires you to do is unlock your way of thinking and stop thinking with this outdated mindset from 2022. It's now 2025. The space has matured. DeFi is evolving, and now is the time to adapt and learn and start to integrate or consider integrating yield generation strategies in your portfolio to expand and grow your wealth. So if you guys are enjoying this, smash that thumbs up button and subscribe. It does help boost the algorithm. Share this video breakdown to a friend or family member to get their way of thinking expanded as well. Let's continue to dive back in. So here it says, Soy goes Swiss bank grade. Soy is now fully integrated into Sygnum's regulated banking platform, unlocking custody, trading, staking, and treasury services for institutional clients. And here is the direct announcement from Sygnum Bank, where it reads, Sygnum Bank announces Soy support for clients on the back serving as a banking partner to Soy Foundation, broadening access to the blockchain built for mass adoption. So just reading some highlights, I won't thoroughly read through the entire post. It says, Sygnum is the first Swiss bank to launch Soy, and that was back in July 2025 with custody and trading offering. By serving as a banking partner, Sygnum broadens regulated Soy ecosystem access and further expands the reach to professional and institutional investors. Staking and Lombard loans for Soy is coming soon. So they will offer staking and collateral features where you can most likely take out a loan very soon, it says here. Soy is held off balance sheet and secured with Sygnum's institutional grade multi-custody solution. Then it says, we are pleased to be a banking partner for the Soy Foundation and expand access to professional institutional investors via Sygnum, a regulated bank, said Matthias Imbach, Sygnum's co-founder and group CEO. Sygnum's unique understanding of digital assets sits at the intersection of the rapidly converging digital asset and regulated financial ecosystem. We are excited to support the Soy Foundation in developing the future-proof, opportunity-ready treasury that it needs to continue to grow its trajectory. Last but not least, before we wrap things up, to full circle back to what I said at the beginning of today's video, how the DeFi ecosystem is maturing and it should not be faded, definitely in terms of your education and furthering your knowledge about the space. Check this out again for the first time ever in history. This was announced on August 8th, 2025. The S&P Global Rating has issued a B- stable outlook issuer credit rating to Sky Protocol, formerly known as the Maker Protocol, making the first time ever a decentralized finance protocol has received a formal credit rating from a major agency. Sky Protocol is a decentralized lending platform built on the Ethereum blockchain, where it enables users to mint USDS, a stablecoin pegged to the US dollar, by posting accepted collateral, where depositors can earn yield by placing USDS into savings vaults, receiving savings tokens, SUSDS in return. With a market capitalization of $7.7 billion, USDS is now the third largest stablecoin globally. Jonathan Manley, global head of market outreach at S&P Global Rating, said that the rating represents a significant milestone in the evolution of decentralized finance, and it reflects the agency's commitment to improving transparency in the sector. The rating underscores growing institutional engagement with blockchain-based financial infrastructure as traditional frameworks begin to intersect with decentralized systems. This is, again, happening for the first time ever. And so think about all the people that are living mentally in the past, thinking that DeFi is still some scam, that it's not regulated, that double-digit yields should be shied away from, and that you should not pay attention to them. Well, here in this community, I cannot stress enough that now is the time to not ignore your education, and instead it's time to engage with the ever-evolving ecosystem and the ongoing developments in DeFi. With that being said, hopefully you guys enjoyed today's video breakdown. If you did, do me a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, and we will see you guys in the next video breakdown.